What do you say? Do you get out of the good old USA right now?
Well, I got to say, I love the USA because we have Ben Bernanke and the Fed that gave us those golden words. We'll do whatever it takes to save the U.S. economy. However, there are opportunities. China clearly is one. Latin America is another one. You could look at the financials in Latin America. And if you want to look at China, remember, David Rubenstein was on earlier today, talked about it, how China is just like where we were at the beginning of the 20th century.
Sounds like you're saying that the QE play is still good. Jay Pulaski, you disagree.
Well, I kind of disagree with the QE play. I also disagree with China. So we have a
okay, well, go to it.
Right here.
Go to it.
Well, no, I think China, real simple. I mean, it looks cheap, and it's been a huge underperformer. So you can make the case a little bit. On the other hand, though, they need to shift from, in my view, an investment-led, export-led growth model to a domestic demand-led, consumption-led growth model. And that means they need to do three things. One, China needs to raise the wages in their workers, okay?
Fair.
Two, they need to raise interest rates so savers benefit more.
Okay.
Three, they need to raise the currency.
Yeah.
All three of those things are really negative for the state-owned enterprises, which are the heart of the Chinese stock market.
Because it makes the prices on Chinese goods more expensive in effect.
Right. Yeah, but it makes imports cheaper, and it gives the consumers more money to spend, and that's what they need to do.
But you've seen that their disposable incomes have risen, actually. They were up 10% in the urban areas, 12% year over year in the rural areas, just sensational growth, and that's what you need for the consumers over there to start spending more.
Jeff, are you looking at outside plays as a result of fiscal cliff issues back here at home?
I think so. Everything that people are looking at now, we always push for this global economy. We always push to be united in our economies, to be connected. Now we have this interdependence. That means we rise and fall together in a lot of circumstances.
Okay, so it sounds like you're saying you can't hide. There's nowhere you can hide.
Well, the process that I'm using to find opportunities is almost finding the best of the worst. Finding where the interdependents aren't as great.
I don't know if I like the sound of that.
Finding the interdependents that aren't as great and looking towards them, because there's going to be certain pockets of opportunity and places.
But best of the worst. I mean, are you anticipating that none of these countries are actually going to do that well, and you just want to kind of ride it out and not lose as much as you might lose in the U.S.?
No, what I'm anticipating now is that because of this interdependence, certain countries are going to struggle a lot more than others. There is going to be opportunities, for example, in Australia, and things like natural resources and mining, to take advantage of things like gold and the mining of natural resources because the population demands it.
And hey,
those are where the opportunities.
Gold could come right back to your QE3 play as well, could it?
Yeah, it can. I mean, look, with all the geopolitical concerns as well, inflationary concerns, gold is always going to be in favor. I mean, until you have the Fed that stops printing money and starts expanding that balance sheet, gold is going to be one of those in favor plays. And even though right now it might be suffering a little bit, it's still, if you're thinking over the next few years, hey, look, Ben Bernanke said unemployment's got to get down to 7% for him to stop QE3. It's not getting anywhere close to 7% anytime soon.
If you think this is a market that's fueled by QE, then why are we looking at the downside we've seen in the most recent sessions? I mean, why are investors struggling?
President Obama, re-election. I mean, it's the fiscal cliff. I mean,
but President Obama re-election also means more QE.
Listen. That's true, and that will help the markets. Right now, though, the immediate concern short term is right now the fiscal cliff. We didn't see anything that happened before the election. What makes us think we're going to see anything after the election?
All right. Maybe I'm saying to myself, hey, I don't want to lose big between now and year end. Do I get out now? Do I look at some of these overseas opportunities?
Well, you can. You could definitely stay on the sidelines if you want. If you want an entry point, look at Apple. It's trading at a very big discount. Or look overseas, Latin America, Australia, and China, my friend.
Well, what about good old Canada up to the north? I mean, that's a resource play where we don't have to go so far afoot, Jeff. What's your take?
Well, I think you have to separate the countries that use QE, and I agree with Jay in terms of QE has run its course. You have to look at the ones that don't necessarily rely on it, devalue currency, create this potential inflation. Canada and Australia are two countries that use it, but they don't use it to the extent we use it. They're very leery, hawkish on inflation.
And much lower debt as a percentage of GDP,
yes,
especially
exactly.
in Canada.
Exactly. Canada with the much lower debt. That overriding concern about the devastation of inflation. There's going to be part of this world that's going to be annihilated by inflation, and there's going to be part of this world that's going to be able to sustain themselves. I think it's very important to see how these central banks look at monetary policy, and look at what the future is going to be in terms of stimulated economies.
But inflation has not been the biggest concern yet, though, guys. We've been hearing this over the past 2 rounds, including Operation Twist.
And still no evidence, right? With the CPI under 2%.
It hasn't been a major concern. I mean, it has been slightly contained. We see some rises in other areas, but even gas prices right now around the country are dropping. So you can't, the inflation warriors out there.
Todd, I would disagree with part of that, because although we haven't seen the inflation as measured by the Fed, which is excluding food and energy, I think anybody that goes to the supermarket or the gas station sees raw material inflation that is extremely important to understand, because now you have things like civil unrest. If food prices go up, fuel prices go up, people are unhappy, and that's what we have right now.